I'm on the record writing for Forbes in 2021 about Bitcoin cycles. At that point, I was, pushing into the mainstream this idea that the Bitcoin cycle will repeat, that Bitcoin should be seen as cyclical because the nature of the supply of Bitcoin is what gives it the economic power, right? That's what differentiates it from other competing cryptocurrencies. It has this economic programming, if you will, that makes the asset more valuable over time. Maybe at a high level, your take, the 4 year cycle, is it over?
I would say that, so before I go as far to say that it's completely over, I'll just give my thoughts on it as to why I think that at the very, very least, the cycle could be changing. One of the things that I've thought is that people correlate the cyclical nature of Bitcoin with the halving cycles, and some also can correlate it with the halving cycles and liquidity. I think that part of the equation could be that in previous cycles, Bitcoin has also been the beneficiary of a lot of stimulus. So we had a lot of government stimulus, we had a lot of printing of money in the amount of trillions and trillions of dollars. And I think that the boom bust cycles that we saw could be more correlated to the fact that we had a lot of stimulus coming into the market at these different times in the cycles that just so happened to have lined up with the different cycles. And because one of the things that I say is, liquidity seeks quality while stimulus seeks speculation. So I think that the boom bust that we saw was more related to the cheap money that was in the system and the fact that people were seeking new assets and they were going further and further out on the risk curve to speculate with that money. And that led to the run ups and the crashes and the run ups and the crashes and the run ups and the crashes. While this time, I think that with the institutional players, we may see one, a decrease in volatility, which I think is being, it's playing out in the sense that when the ETFs launched with Bitcoin to now, the volatility has dropped. And I think that decrease in volatility would lead to more, I don't want to say pure stability or anything like that, but the decreased volatility would make it more attractive to a broader cadre of potential investors. And just by a function of looking at things that have happened with like the gold ETF and just looking at the way the inflows have been happening currently with like BlackRock and Fidelity, and then we have corporate adoption, the impetus to rotate out of Bitcoin may be significantly reduced, and because the boom bust cycle may be less likely to happen. So in the past, you have people going from Bitcoin to altcoins, capital leaves the market. But right now, you have institutions that are accumulating Bitcoin on behalf of their clients. You have corporations that are accumulating Bitcoin on the balance sheets because they've seen how successful it can be. In the case of strategy, and I think what we're seeing with strategy is that their success from last cycle to now has, quite frankly, influenced a lot of other corporations to try to take on a similar strategy and add Bitcoin to their balance sheet. And because of that, the incentive to rotate out of Bitcoin is far more reduced than it has been in previous cycles. And that's kind of just like the 1,000-foot view of what I'm thinking. The larger Bitcoin's market cap gets, the more extreme the sell pressure is going to have to get to cause those dips. And if at and let's just use this range, if between 110 and 120, someone can dump 80,000 Bitcoin and only drops us down by less than $10,000, how much do you think it's going to take to do that at 200, then at 250, then at 5? Do you see what I'm saying? Everything becomes harder to move in terms of both going up and going down the larger Bitcoin's market cap gets. And if my general thesis is correct, that the institutional base is forming the base and it's creating an entirely different investor profile for the Bitcoin ecosystem, where in the past you had people that would rotate into something like Fartcoin or Pepe or Dog with Hat, while now someone holding the ETF, someone like my father, for instance, he doesn't. It was hard enough to get him to buy the ETF in the first place, let alone for him to sell it and rotate into altcoins. It creates an entirely different thesis for what the market can do. So if the institutions are creating this persistent bid, and then we have corporations creating this persistent bid, we now have a base. And where the froth may come in is if there's a retail mania, sure, that can still happen, where we see run ups. But my whole thing is the larger the market cap gets, the harder it is going to be to move it up and the harder it's going to be to move it down. And that's why I say the stairs to heaven. We're going to reach different levels and just keep stair stepping our way up. And the reduction in volatility plays into that as well, that comes as part of this process. So that's kind of the way I think about it. OGs are going to sell, and I've heard the similar conversations as well. But there's other OGs that are seeding these Bitcoin treasury companies as well. So there's there's nuance there. It's not as just if OGs are just going to be selling matter of factly, fait accompli, whenever Bitcoin hits a certain price and living off their gains. There's other OGs that want to see this extend, that want to see this grow. So I think it can play out, and that equilibrium is where we're going to find where the price lies.